Okay, welcome guys. Welcome back to our lesson for today. And welcome back to term 2 of 2023. This is the first chapter for 2023 term 2. And as you can see, the name of our chapter this time is inventory valuation. So we're going to be dealing with inventory valuation. So, and you guys know the meaning of the name inventory. Inventory means trading stock, and then valuation means value. Inventory means trading stock, and then valuations means value. How to determine the value of our trading stock, that's what we will be dealing with here today. Okay, so let's get started. First of all, we'll do this match column A with column B just quickly, then we will continue. So choose the description from column A that matches or that best describes the stock valuation method in column A. Write only the answer A to D next to the question number 2.1.1 to 2.1.3 in the answer book. So this is the answer book that we will be using right here. This is the answer book and this is the question paper. Okay, so let's get into it. The first thing that they are talking about right here is specific identification method. And then the second one is first in, first out. The third one is weighted. Let me explain what these things are. Okay, when they are talking about specific identification, they are basically talking about identifying the value of your trading stock or your closing stock specifically without going or doing anything complicated. For an example, if they give you a VW Polo Vivo, and then they give you a VW TSI, and then they give you a Golf GTI. You know, these products are specific and they are huge and very identifiable. So which means if they say we have 400 VWs Polo Vivo left, so you're going to take the 400 multiplied by the price of each car. If each car is 150,000, you're going to take 400 rand multiplied by 150,000. Then you will get the price for the cars. That's being specific. If you have 200 VW left, you are going to take the 200 multiplied by the price of each VW. Then you are going to get the total value of your VW cars. Just like that. That's specific. It's straightforward. So let's go to the second one, which is first in, first out, the FIFO method. So on this one, basically what they are saying is first in, first out. What does this mean? It means the first stock that we purchased will be the first stock that must go out of our business. First in, meaning the first stock that we buy is the first stock that we sell. That's first in, first out. It's just a principle. Then there is a weighted average. Weighted, it means we are weighting, we are dividing, we are giving weight to our product. So it's all about division. I won't explain further now. Let's move on and match. Okay, specific identification. Let's just look for a description there. Here, the first one is saying the oldest stock is sold before the latest stock or the latest purchase. The oldest stock is sold before latest purchases, meaning we first sell the oldest stock before we sell the latest, the new ones. This is FIFO. This is first in, first out. So 2.1.2 will be number A. Let's write on our answer book. 2.1.2 will be number A. Then now we move to the second thing here, number B. They are saying the total value of goods divided by the number of units available for sale to calculate the value of closing stock. Once you see divide, that one is weighted. So where we are dividing the total value of the goods divided by the number of units available for sale. That is the weighted average method. Very simple things. These are the type of questions that give you 3 marks. 3 marks on mahala. So don't make sure you don't miss these type of questions. Then number C. First, let's write on our answer book. So we're going to say 2.1.3 is number B. 2.1.3 is number B. So now let's go on to the next one. Number C, what are they talking about? They are saying stock is valued based on actual cost prices. Stock is valued based on actual cost prices. That's the one I was talking about, when the actual cost prices, maybe if they say you have a 400 BMWs, the first BMW cost 1,000 or 200,000. So that's the actual prices. This one we call it the specific. We are being specific. So specific identification is number C. Understand? So specific identification. Oh, I made a mistake here. FIFO is number A. Specific identification is number D. Number is number C. Yes. So that's it. That's it. I will dwell more on FIFO, guys, and explain FIFO first before I go to weighted. So, because those are the most that are always there on your question paper. So FIFO, first in, first out. What do they mean? Let me take out this. Okay, they will give you this kind of information. For an example, on FIFO, you are focusing on the purchases, and you focus on the number of units on hand at the end of the year. So they will give you the stock balances. Number A, the stock balances. On 1 March, we have 125 units of cricket pads, which is the beginning of our financial year. Then 28 February, we have 420 units of cricket pads. What does that mean? This means this is the number of cricket pads that we are left with at the end of the year. Cricket pads. That's the number of cricket pads that we are left with at the end of the year. This is the remaining stock. This is the closing stock, right? Then you are also going to focus on what? On the purchases, meaning on the cricket pads purchases. So they were going to tell us 15 March, we purchased 120 items. 31 August, we purchased, 25 August, we purchased 230. 10 December, we purchased 180. 15 January, we purchased 70. So in total for the year, we purchased 600 units. That's the thing that you are focusing on when it comes to FIFO, or first in, first out. So what you are basically trying to do here, you are trying to calculate the value of your closing units, the 420 on 28 February. You are trying to calculate the value of these units. What is their value? So remembering in mind that we are using the FIFO method, first in, first out, which when you look at these purchases here, which one is the first in, and then which one will be the first in, and which one will be the first out? The first in here, the first stock that we purchased, which one? 15 March, we purchased 120 units. This is the first stock that we purchased during the year. That is the first in, which means we assume this stock, we will sell it first. Since we purchase it firstly, we must also sell it first. That's the principle of the FIFO method. Then here we also have the second stock which is purchased. I think we will also sell it first because it's so recent. But this last one on 15 January is the last stock that we purchased during the year. Do you think we're going to sell this stock, whereas is the last stock that we purchased? No, we cannot. We first sell the first one that we purchased. Once we finish this one, we sell this one on 15 August. Once we finish this one, we sell this one on 10 December. Once we finish this one, we sell this one on 15 January. So you see, the first stock to be in or to be purchased must be the first stock to be moving out of our business or to be sold out of our business. That is the principle of FIFO. So this question did not require us to calculate. It's just I was just explaining more on FIFO. That's how you deal with, that's what FIFO is. Whereas weighted, what did they say on weighted? What do we do on weighted? Weighted, they are saying here, number B, total value of goods divided by number of units available for sale. That's another thing. Total value of goods. I won't explain weighted so much because it's so simple. When they say total value of goods, they mean you have to take your opening value plus the value of all your purchases minus any returns, then divide by the units of those things. Which means if you take this one, you must divide by the number of units. If you take these purchases, total value, you must divide by the number of units of purchases. That's just weighted average method in a nutshell, like in just a summary. See, right? So this video, I was just explaining these things. Just trying to get you into gear. So on the next video, we will be doing a live example. We will be calculating the value of closing stock for the two items. Remember, we have two items. We have cricket balls. We also have cricket pads. So we will be calculating the value of the closing stock. So if you can check on cricket pads, we have we have closing stock of 420. We have to calculate the value of these 420 units. It's how much is it in rands. Then on cricket balls, we have a value of 660. We have to calculate the value of this 660. How much is it in rands? That's what this question is all about. Calculate the value of closing stock. So we will be using the FIFO method. I will be showing you here on the next video. Then we'll be using the cricket balls using the weighted average method. I'll be showing here. We will also go on and do cost of sales and so on. So I will just cut this video before it's too long. I've realized with longer videos, people cannot learn on longer videos. So I have to make my videos short. Why do I have to do that? Because it's so simple to grasp the concept in just like a 12 minutes video like this one. Okay, thanks a lot guys for the support that you've given me. I'm willing to be putting on videos each and every day. Please keep me accountable to post video each and every day. Keep me accountable on the comment section and on the community there on YouTube, so that I make sure that I deliver the lessons for you guys. I don't want anyone to fail accounting while this YouTube channel is around here. I'll be dropping lessons each and every day for you. So make sure you subscribe, you share it with other people, and you check it out every day as I will be dropping lessons. So thank you. That's the end of our lesson. These are the answers. This is what we're just doing. Simple thing. Thank you.